This is Joe Dexter, Ace Reporter, and I am going to discuss for you top markets. Dow tumbles 700 points for its worst drop since October as investors fear a COVID resurgence. If you haven't heard, and you probably heard because this article is published Sunday, July 18th, and the article is written by Tanaya McKell and Pippa Stevens from CNBC. U.S. stocks fell aggressively Monday on concern a rebound in COVID cases would slow global economic growth. The selling picked up as the session went on, and the Dow Jones Industrial Average has its worst day since last October. That's not good. People are anticipating the worst. That's not good in the market, and it pushes it more towards a bear market than a bull. The Dow dropped 725.81 points, or 2.1%, to 33,962.05 in a broad-based route, I don't know, it's ROUT, it's something like that. That sent all 300 members lower. At one point during the session, the Dow was down 946 points before recovering some ground into the close. The S&P 500 fell 1.6% to 4,258.49. Energy, financials, and industrials were the worst performing sectors. The tech-dominated Nasdaq Composite slid 1.1% to 14,274.98, posting its fifth straight day of losses and worst losing streak since October. The 10-year Treasury yield reached a 5-month low of 1.17%, exacerbating fears about slowing economy. It doesn't help that this COVID variant Delta is around. The small cap Russell 2000 dropped 1.5% and briefly dipped into correction territory on an intraday basis, down more than 10% from its March high. And this is where I discuss this, because don't mind you, inflation is going up too. You and the workers, they're getting increased pay, which it leads to concerns on the market and other things with COVID Delta, but it's mainly COVID Delta. You have two concerns coming together. Concerns about market technicals and concerns about growth. Lion's chief economic advisor Mohammed El Aaron told CNBC's Squawk Box on Monday that's what all the asset classes are telling you. Not gonna. Well, I'm gonna go into detail that is gradually dropping from September 21st, 20 to October 28. Where we're registered in it is 5th with a Dow Jones Industrial Average. Needless to say, there's a lot of stress with this talk of a new COVID Delta variant. Let's just say this just shakes the confidence of the people on Wall Street because they're panicking. They're gonna need money for whatever, so they're pulling it out of the market. And usually when they do that, they're panicking, or they just need money. I don't know. COVID cases have rebounded in the U.S. this month, with the Delta variant spreading among the unvaccinated. The U.S. is averaging nearly 26,000 new cases a day in the last 7 days through Sunday, up from a 7-day average of around 11,000 cases a day a month ago, according to CDC data. Cases were already flaring up around the world because of the Delta variant. Well, the Delta variant is coming, and it's reported that the people without it are getting it, and I don't know. It's rather to get vaccine or not is the person's choice, but data is not helping matters right at this moment for people without it. CBOE volatility index surged a high as 25 amid the broad market sell-off, its highest level since May. The so-called fear gouge looks at prices of options on the S&P 500 to track the level of fear on Wall Street. Airlines got hit on investors reassessed whether travel among consumers would live up to high expectations, with shares of Delta and American sinking about 4% each. United lost 5%. Key stocks linked to global economic growth also fell. Boeing shed 5%, and General Motors and Caterpillar dropped about 2%. The market appears ready to take on more defense character as we experience a meaningful deceleration in earnings and economic growth. Which means, there's been talk about a lot of lockdowns and, stuff like that, but usually when prices go up, people stop buying and people, they are more conservative. So that ushers in more of a bear market than a bull market. Because people don't have that funds and they're conservatively spending, which means, you know, it's talk of recession, maybe. Not saying that, but that's what I'm speculating. That's what people are speculating. Morgan Stanley chief U.S. equity strategist Mike Wilson said in a note Monday, market breadth has been deteriorating for months, and it is just another confirmation of the mid-cycle transition in our view. It usually ends with a material 10 to 20% index level correction. Wilson advised clients to buy staples such as Mondelez International to weather the decline. There's more to the article. Stand by, folks. We're talking about oil. Now, when you have cuts in everything and oil goes up, well, shipping decreases gradually, and we're more conservative as moves towards the bear market. Oil prices fell on fears of slowing. Might be wrong. Oil prices fell on fears of slowing growth as OPEC Plus agreed to begin phasing out production costs. Energy stocks were among the worst performers, with ConocoPhillips off by more than 3%. ExxonMobil also lost 3%. WTI crude shed 7.5% to settle at 66.42 a barrel. The energy select sector SP/PDR lost 4% for the worst performance among the 11 sectors. Needless to say, when you have gas at enormous rates and they're trying to recoup the loss, it's got to come down eventually, because it's got to be affordable for people to live. Otherwise, people are not traveling that much and risk of slowing of the pandemic or increasing of a pandemic again is not helping. The financial select sector SPDR was the worst second performer, down 2.8% as falling yields crimped the profitability outlook for banks. JP Morgan dropped 3.2% and Bank of America fell 2.6%. Market breadth was extremely poor, with advancers beating decliners on the NYSE by nearly 5 to 1. Big tech shares were not immune to the sell-off, with Apple and Alphabet each down about 2%. This is not good for the market as I speak, and when the market gets like this, it's I don't know, it's not that good. Despite Monday's decline, the overall damage to the market remains tame. The S&P 500 is still just 3.1% following its record reached last week, and investors are hoping more better than expected earnings results will put a bottom under the market. Billionaire investor Bill Ackman said Monday the spread of the Delta variant doesn't pose a significant threat to the economic reopening as it could speed the pace to herd immunity. He's saying it doesn't pose, but I don't know. There is fear and anticipation there, and usually with fear and anticipation, it's not a good sign for the markets. I hope what it does is that it motivates anyone who doesn't get the vaccine to get the vaccine. I don't think it's going to change behavior to a great extent. Ackman said, Squawk Box, you're going to see a massive, in my view, economic boom. We are going to have an extremely strong economy coming in the fall. And that is CNBC's Yun Lee, Jeff Cox, and Michael Bloom contributing reporting. I have to say this. Not gonna trust the economic boom on the market. I'm still a skeptic. I know people are gonna want to spend, and people are gonna want to go out and do different things, and they're starting already, but the fact of the Delta variant shakes its confidence. We don't know for sure what's going to happen, so I'm skeptical of Bill Ackman. He's saying it's an economic boom, but it's an economic boom for who? People are in debt, for one thing. If you're an average Joe like me, or if you're in the middle class, you're paying for this, you're paying for that. Sure that they're getting money for their kids, or getting money or whatever, but let's just say it's not easy, because all I know is people are panicking. People on the market, it dropped 700 points. People are panicking. That means people lost money. People lost money, it's, what do we do next? So, I would think, you're going to need to go through reassessment on how to repair the damage. And I, Joe Vester, believe that's the case. I'm going to leave it to Joe Vivaldi. I am, that's me. Hope you enjoy the podcast. You can check out on my Patreon page of patreon.com/the Joseph Vivaldi Network. I'm going to have it in the description below. You get podcasts like this earlier than you do on Spreaker. Also, I want you to check out Stash.com for $5. In the link below, I will have where you could get this app, or you could get this thing and you could sign up. With that link, you could get $20 for investing, and I could get $20 for investing. And I know I said a lot of rough stuff about the market, but if you are an investor and you have money, a bear market might be a good chance to get in, to buy some of the stock that was dropped. It's, I don't know how that works. I mean, people sell when it's up, buy when it's down. I don't know, it's like, but I mean, if you're looking for a long-term investment and you want that investment to work for you, and you say, hey, I want to do this, build for the future, see what happens, hey, it's a step. So Stash can be good for you. Also, another thing, check out One Main Financial. One Main Financial is a place to get a loan if you need it. They helped me out greatly. I do appreciate what they did, and I'm taking care of business. And you're gonna pay back, but it is well worth it. Just mentioned that Joseph Vivaldi and the Joseph Vivaldi Network sent you. They helped me out, and I'm greatly appreciative. And check out Joe's Writers Club too, which I've plugged many, many times. So that's the podcast. This is Joe, X-Rays reporter, and have a good night.